analysis.
Let's hit tech first. Should we be surprised at this resurgence, this melt-up? And it's maybe caught some people by surprise.
I think investors should realize 2024 has been a year of surprising strength. The market has avoided so many opportunities for weakness, and now we're entering the final weeks of the year where we know there's still $7 trillion of cash on the sidelines and quite good visibility in next year. So I think stocks should finish very strong.
Why do you think money is going to the mega caps now in the manner that it is? It's up 1.75% today. The Nasdaq up almost 4% over a month, and able to achieve this milestone.
One reason is mega caps have been leading. So it's sort of what people reach into the shelf when they're risk on. But second, we know that when interest rates fall, the mega caps actually are very sensitive to that. And I think today was a day where the odds of a December cut increased. You know, the probabilities are now solidified, and that's actually bullish for tech.
Because the CPI was, you know, some would say sticky, but it was largely in line. Is that how you read it?
Yeah, that's right. And I think it's allowing the CPI print today allows people to imagine a path to 2% because shelter now is cooling to a level that's in line. Auto insurance, which was at 25% earlier this year, year over year, is now down to 13%. So the two biggest contributors to CPI are in a downshift. I don't think the fact that used cars are going up is going to reverse the Fed's view. I don't think the Fed's going to tighten because used car prices are up.
All right, so Fed's cutting next week. That's your base case?
Yes.
And then what happens after that? All bets are off? Wait and see? What do you think?
I think the Fed put remains in play because neutral is, let's say, 2.5% to 3%. We're at 4.5 after the December cut. So we know the Fed's in a cutting cycle. I actually think the best case is for the Fed to do the fewest number of cuts next year.
That means the economy is pretty strong.
That's right. It's strong. They're not harming the economy by keeping rates here. And the labor market is holding up, and now we have a lot of firepower for future cuts, which support stocks.
Okay, you talk about a Fed put. You also talk about another put, and that's a Trump put.
Yes.
He's going to be here tomorrow, by the way, ringing the opening bell. People are excited about that down here for sure. But you say that that is a substantial part of your outlook for the new year. The Trump put, explain.
The Trump put is, on the simplest level, it is a White House that is going to measure its success by how the stock market performs. But it's also a president that's coming into a second term, but with a lot of previous experience. So this is a cabinet that has good private sector acceptance, and I think very markets friendly. Overall, I think investors who might have been cautious for the last few years now want to be risk on next year.
All right. So your outlook to me is interesting, the way you sort of game out where the S&P can go, because you say we're going to 7,000 by mid-year, which sounds amazing because most targets that I've seen are 7,000 at the top end for the entire year. Your full year forecast, though, is 6,600. Why?
Part of it's cyclical. We're coming off two back-to-back 20% years, and there are 5 precedents to look at. 5 of the 5 precedents since 1880 had a weaker second half. So I'd say that's the base case. The reason I think markets do better in the first half is that there is going to be a lot of enthusiasm about a new White House, some of the headlines that come, whether it's deregulation, et cetera. And we know there's still a ton of cash and a lot of low leverage on the sidelines. That's why stocks can rally. And by the way, 11% in a few months, we've seen that routinely the last couple of years. But in the second half, I think markets start to worry about the larger macro risks like the Middle East, the potential risks of tariff and executing that, and potentially the fact that Doge could be so successful that it could slow the economy.
You're worried about being too efficient, cutting too much, and what the impact is going to be?
Yes.
The tech industry is undergoing an exhilarating metamorphosis, poised to redefine the digital landscape as we know it. Chipmakers, once the unsung heroes behind our devices, are emerging as the vanguard leaders of this transformation. Companies like NVIDIA Corp and Broadcom Inc. are at the forefront, setting the stage for a new era dominated by artificial intelligence and infrastructure. There's buzz in the investment circles that these hardware giants are not only meeting the current seismic shifts head-on, but are actively crafting the future playbook in silicon. Through a riveting interview with Howard Chan, the founder and CEO of Curve Investment Management, insights reveal that these tech titans are readying themselves for an explosion in demand like never before. Are we witnessing the dawn of a silicon gold rush? Tech investors are all ears, anticipating the unfolding drama in this high-stakes arena. Welcome back, everyone, to Investocracy.
Welcome back. Shares of NVIDIA are bouncing back pretty strongly today, up nearly 4.5%, but they're still down 7% from their November highs and on pace to break a 4-month win streak. Comes as Broadcom is having its best month ever and has outperformed NVIDIA by 30 points since reporting earnings last Friday. So what's the better bet from here? Our next guest has a buy on both. Let's bring in Vijay Rakesh, senior semi-analyst at Mizuho. Exciting times here, Vijay. It's great to have you. And are you in the kind of everybody can win camp here, or is NVIDIA's kind of moment as the most important stock in the market over?
Yeah, thanks for having me on, Kelly. So I think if you look at NVIDIA and Broadcom, we like both. Obviously, both have been top picks for us, and both have done well this year. I would say valuation-wise, they're about the same, but I would say NVIDIA is very well owned. Everybody has NVIDIA. They're the king on the AI side. They dominate the market. They're almost running at $100 billion annually in data center revenues. Broadcom, on the other hand, is just starting to put up massive numbers now. I think we like the name. We have a huge ramp coming up over the next 2 years. It's very under-owned. People were cautious heading into earnings. And so we think there is probably some more legs left to the run there, given that it's much less owned than NVIDIA.
Delving deeper into this narrative, we find that the buzz around NVIDIA and Broadcom is not just market hearsay. These companies are positioned strategically to capitalize on the unprecedented demand for computing power driven by the AI wave. Howard Chan underscores this by noting how the existing and future capital expenditures in the sector are prominently geared towards hardware and infrastructure. While everyone was gazing at software unicorns, a storm was quietly brewing in the silicon foundries. Investors are licking their lips at the juicy prospects, while bystanders wonder if they should have clung harder to those old CPU jokes. You know, the ones about how many chip makers does it take to change a light bulb? None. They've already programmed the light bulb to change itself. While some sectors might be squirming under the weight of towering interest rates, tech stalwarts like NVIDIA and Broadcom are seemingly unfazed. They continue to flaunt robust balance sheets, embodying resilience amid the volatility. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
For Broadcom, right. So, you know, I was writing about it the other day, and a lot of people said, I had no idea, you know, about Broadcom. So you're right. It's going to take a little while to penetrate the consciousness. Maybe that's a tailwind. What about NVIDIA?
Yeah, I think NVIDIA will do very well. I think what we saw in the last 2 weeks is a little bit more, I would say, you know, people getting excited around quantum compute. And so you saw a little bit of a softening on NVIDIA and a little bit some of the focus moving to the quantum computing names. So that said, I think NVIDIA is still, you know, the leader on the AI side by far. They dominate 90% plus of that market. And that's a market that's growing 90 billion, 100 billion this year, going to almost 160 billion plus next year. So massive market for NVIDIA, and they dominate that. So we continue to like the name. I think maybe it's a little bit of a pause, but not a name to be let go. I think this is going to be a huge name for 2025.
You have a $175 price target. One more question on this, and I want to ask you about Tesla. But, you know, in the case of NVIDIA, do you think that there is a shift going in the AI world? And maybe you know more about what's going on, sort of the latest of what's going on than I do. But is there a pivot where it's gone from this kind of massive rush to build out these huge data centers and just do huge model pre-training to inferencing and time test and compute and all of that? And does that actually, you know, lesser favor or require NVIDIA?
Not really. I think when you look at inferencing, it's already 40-50% of the workload. And when you look at NVIDIA, their GPUs can be dynamically shifted between training and inferencing. The hyperscalers can allocate whatever capacity workload they want to training during the night and inferencing during the day or however they want it. But it's very fungible. But you will see inferencing continue to grow. And that's why there's a little bit of an opportunity for custom silicon as well, where you see Broadcom and others start to gain some traction.
Yeah, Marvell as well, much smaller player, about $100 billion market.
Chan points at the second quarter of the fiscal year as a pivotal period, with EPS growth expected to unveil striking patterns, a prospect that has even the skeptics intrigued. The Nasdaq 100 is mirroring this excitement, with tech valuations soaring through the figurative ceiling. A 21% consensus in EPS growth, up from 15% this year, is no small feat. However, it's worth pausing to recognize that this is not new for these juggernauts, who have dazzled markets consistently for over 2 decades. Moreover, the influence of AI extends beyond tech, as elaborated by Chan. There is a ripple effect across other industries like biotech and construction. The rise in productivity in service industries directly and the AI investment spilling into non-tech sectors indirectly manifest the profound impact of this technological revolution. Simply put, AI is not just rewriting the rules, it's authoring new chapters altogether. The compelling narrative here is NVIDIA and Broadcom's dual role as suppliers and beneficiaries in this high-demand ecosystem. Not only are they addressing current needs, but they are also the architects charting out the future, painting the tech world with the tantalizing allure of silicon gold. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Vivek, I want to go back to NVIDIA here for a minute, because I'm going to ask you the same question I asked somebody else on this show last week. I was speaking to founder of an AI company that is really ground level when it comes to all of this Gen AI application adoption, the LLMs and the creation of them. And this person said to me that they think that the world is much more close to being oversupplied in GPUs than everybody realizes, or at least investors realize, and that 2025 could be a year where you see a dramatic swing in light of that. Flash forward to a couple of days ago, Satya Nadella from Microsoft is on a podcast, and he says, power, yes, constrained, quote unquote, I am not chip supply constrained. Is there a possibility that we actually see this shift next year? And if so, is that part of why we're seeing NVIDIA sell off right now and that rotation into other names like Broadcom, as some investors are anticipating this?
Sure. No, Morgan, that's a fair point. But I think what many of these customers or partners are looking at is the situation when it comes to NVIDIA's Hopper product, right? You know, Hopper came out 2 years ago. And we are just at the verge of making the crossover to Blackwell. Blackwell is just starting to get shipped, and it takes a minimum of 2 to 4 quarters, right, for customers to get their complete allocation. So it's very hard to see how they are overstocked when they have yet to deploy their first cluster, right, with Blackwell. The second very important thing that I want to mention, right, which is something that came out on Broadcom's earnings call, is they are saying that we have line of sight to multiple hyperscale customers who want to build clusters that are 1 million accelerators each. You know, the state of the art today is a cluster that XAI is building that is only 100,000, going to 200,000, then maybe 1 million. And Broadcom is saying we will see multiple million unit accelerators. That suggests that the market for training could last much longer and be much bigger than we think over the next few years. So what you said makes sense, I think, for NVIDIA's prior generation product, but Blackwell, they have just started to ship. And that's why it's hard to see that being overstocked anytime soon. And it's back to the point I made before, that it's execution on Blackwell. The day they get Blackwell out and it is shipping without any hiccups to all these customers, I think interest will come back to NVIDIA just as quickly as it seems to have gone in the near term.
As the dust settles over projections and analysts mull over their charts, one thing becomes crystal clear. NVIDIA and Broadcom are undeniably at the apex of an exhilarating tech wave that's not ebbing anytime soon. With robust market predictions and an ever-expanding AI presence, investors might find themselves on the cusp of a golden opportunity. Current trajectories and forecasts signal a promising elevation in their positions, making them not just players, but pioneers in this new era. The stocks of these trailblazers are remarkably resilient, with their consistency and potential appealing to both the cautious and the adventurous investor. The unfolding quarter promises pivotal insights and impactful growth maneuvers. Those keeping a watchful eye might realize that investing now could very well be investing in tomorrow's digital goldmine. Are you ready to take part in this riveting journey? Or will you watch from the sidelines as these tech titans redefine what's possible in today's digital ecosystem? Share your thoughts and let's continue the conversation about the future of tech. And finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.